Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So markets gradually, slowly waking up after the holidays. So on Monday, the first full trading session on the markets. As gold is not an exception, today we have prepared as usual the fundamental analysis of the gold market. Mostly it stands positive, at least for the first half of the year, probably, definitely for the first quarter. Mostly the same driving factors we have as in the Forex market that we discussed recently. So here is just using the common sense, you could build the chain of the sequence of the events that stands in relation to each other. For instance, we could start from the poor situation in the United States economy. It's widely expected that we will get worse than expected numbers for fourth quarter of this year. Gross domestic product results, non-farm payrolls is also expected around 50,000. So this also poor numbers as lockdown stands here and there in the United States. Overall situation has been frozen and the current levels as everybody take the holidays, Christmas and the New Year's Day. And the problems of the virus is yet to be resolved in the United States. Vaccination started, but not very aggressively, the same as in Europe. So that brings us to the idea that overall economy performance will be poor in the fourth quarter of this year and in the first quarter of 2021. So we will not be surprised if we will get the negative gross domestic product numbers or around the zero on the next quarter. This in turn means that inflation will stand under pressure. And that in turn, the second chain in the sequence is that central banks will keep its accommodative policy and provide more stimulus, especially with the Joe Biden administration. It's more than probable. So we'll get more money that's flowing in the markets. That's the overall common sense conclusion that we have. So in more details, you could read the fundamental report. Also vaccination, guys, it also shows not really very good performance by far. We have the three problems with the vaccinations. First is the lower efficiency compared to laboratory tests. Second is the problems with the production capacity to provide necessary amount of doses to vaccinate everybody fast. So today I've read in the Reuters that the representatives of the farm companies tell that only by the September it will be possible to produce the 200 million doses for Europe, and this is just half of the population. And third, by the September, so by the end of the year. And the third moment is not everybody would like to take the shot of the vaccine. So by the polls in the United States, only the 40-45% of the population are ready to do this, while for the best efficiency it needs to be at least 60-65%. So all these three factors tells us that the results of the vaccination will be either postponed, last for a longer period, or even will be muted for some time. And also then supportive to the gold. In the second half of the year, the situation could change, starts to change, and it stands in direct relation to the efficiency of the vaccination. If efficiency will be relatively fast and you will get some results right to the summer, that in turn will make impact on the policy of the central banks that will contract the stimulus packs. And that will bring the more value to the currencies, which become the headwind for the gold. If nothing of that sort has happened, it could be longer lasting action. And the second headwind that could appear is a rising inflation. If it will be too much liquidity and inflation will become meaningful, it also will become a headwind for the gold because the real interest rates will start to rise. So But that will stand only in the second half. In the nearest time, we see positive factors for the gold. This is, as I said already, stimulus, some difficulties with the vaccination performance, low inflation, all this stuff stands supportive to the gold market. Finally, guys, we're turning to the technical side, and the major event that we were waiting for on the monthly chart has happened. We've got the monthly bullish grabber that suggests action at least above the 1975, but I will not be surprised if market will take out the 2077 top. It's also possible. That brings absolutely different dimension to the technical picture in the near term. It makes us be focused on the bullish signs while market stands above these lows. This is the bottom of the grabber. Grabber will be valid until market stands above it, and that makes us to treat overall context as a bullish and treat any pullback here as a retracement, considering taking the long position. On a daily chart, I tried to show one of the possible scenarios how market could deal with the grabber that we have. Definitely should be some extended action because it stands on the monthly chart. On the daily chart, it should be some pattern, and one of the patterns that I see that could be formed here is the reverse head and shoulders pattern. Take a look. This bottom stand in 1618 extension of this most recent swing. So here we have actually the butterfly. If you remember, we have traded it with this Pfizer collapse. It's dropped right to this area. That's very typical for the head and shoulders. While the market will rise to the 1960 approximately, it could become the head, then the pullback, and then extension. Somewhere right back to the top or even an extend of the top. This is the second question currently is how market will behave here. Yes, some questions exist how market will behave in response to this wide resistance area to the next level, but in general that's one of the patterns that could be formed in the medium term, and this is the pattern that we'll keep an eye on. Meantime, in the shorter term perspective, take a look, market still stands in a range of the high wave pattern, but at the same time, despite the thin liquidity on the market, it's keep growing and slowly but stubbornly moving to the upper border of this pattern. That's the positive sign. On the flow time frame chart, we already mentioned that forming of the pennant pattern absolutely doesn't correspond to bearish sentiment. Usually when the market shows the reversal, it happens fast. Forming the triangle consolidation right in the point where supposedly should be reversal stands absolutely irrational. It means that market here doesn't prepare to reversal. It prepares to upward continuation, because pennant in current situation is a continuation pattern. So we do not need this anymore. Potentially, we are dealing with the same ABCD pattern. CLP has been hit, retracement has been hit, our invalidation point still stands untouched, and potentially that could become the butterfly that could let market to finalize the OP target around 1930. That's the target that we have here on the follow time frame chart. After it will be reached, some meaningful pullback could happen, and we intend also to consider it for possible taking the long position or more extension, because we have the long-term bullish pattern on the monthly chart. In the shorter term, on the hourly chart, you could see that market stands well with our bit ugly butterfly. So market keeps well at this trend line, as we said. You could try to buy here, but control the trend line and this loss, this invalidation point of this butterfly. But surprisingly a bit, after this sharp sell-off, market was able to hold here and keep climbing to the upside. On the hourly chart, nearest target stands 1907, but I suppose that it could be a bit higher, 1915 approximately, because here you also have this ABC top D pattern that has slightly higher target. With the breakout above the top, it could be some slippage here to the upside based on the stops that have been placed here, triggering the stops. The market could hit this ABCD around 1915 as well. Anyway, that's the point to focus on, and maybe the pullback here could happen as well. So with the retracement down from here, it also could be interesting to see whether we will be able to get the long position. So any pullback currently we need to consider in the light of the possible taking the long position to possess ourselves with the monthly pattern. So that's what we intend to do on the gold market in nearest time. So currently we do not consider taking the short positions. except only on the very short-term time frames. If you would like to, you could consider taking the short position. Currently, while the monthly grabber is valid, we're mostly focused on the bullish patterns, bullish stops, and consider the pullbacks as a chance to go long on the gold market. Until market keeps valid this grabber, until it stands above 1775 lows. So that's our view on the gold market, especially because, guys, fundamental background also stands supportive to this idea. So that's what we will keep an eye on the gold market in the nearest time.